What is going on, apes? I hope you guys are enjoying your weekend, but in this video we have to talk about the new amendment that is being proposed for NSCC-002 and give you guys the rundown of what that is if you are unfamiliar, because this could essentially force over-leveraged hedge funds and institutions to cover their short positions and delaying the squeeze. So we need to talk about it. This is very, very important information, but we will also go over the option chain for next week because we are seeing signs of a potential gamma squeeze. Now, keep in mind, this is only my opinions. This is not financial advice. You are responsible for your own investments. But before we do get into that, make sure to hit that like button and subscribe to the channel if you are not already. Now, getting right into it, guys, the proposed rule change consists of modifications to rules for a supplemental liquidity deposits of the NSCC's rules and procedures. Rules to 1. Calculate and collect, when applicable, supplemental liquidity deposits to NSCC's clearing fund, supplemental liquidity deposits or SLD, on a daily basis rather than only in advance of monthly expirations of stock options, defined in Rule 4A as options. Now, this is key here, guys. This is a little bit of rundown of what NSCC-002 proposal actually is, and this is essentially giving you a key indicator that even the regulators, right, the NSCC, the National Securities Clearing Corporation, they are aware of the over leverage and massive liquidity problem that is being had with hedge funds and institutions. So they are trying to desperately create these new rules to get this in check so we don't have a huge problem on our hands. Now, to the amendment that is being proposed, and keep in mind this may or may not pass on Monday because we have already had this proposed and it just got delayed. So it could get delayed, it could get totally scrapped and done away with, or it could pass. So keep that in mind. It's not a for sure thing that is going to go through. Even if people tell you that it's for sure, it's not for sure. So just keep that in mind. But as described in greater detail below, NSCC's adopted the SLD requirements in 2013 to establish supplemental liquidity deposits to the clearing fund designated to ensure that NSCC has adequate liquidity resources to meet its liquidity needs during monthly options expiry settlement periods when NSCC's observed significant increases in its liquidity exposures. Since that time, NSCC has continued to strengthen its liquidity risk management by diversifying its sources of qualifying liquid resources. These efforts are aimed at, for example, managing the risk that any one of these sources is reduced. Now, getting further into it, guys, in connection with these ongoing efforts, NSCC has proposed the changes to SLD requirements as described in greater detail in this filing. The proposed changes include 1. Calculating and collecting, when applicable, SLD on each business day rather than only during the monthly option settlement period. So this is a huge red flag right here that they don't have enough capital to meet their requirements. And the only thing that has really changed in the marketplace, especially in 2021, is all the momentum stocks that have been going crazy and forcing really hedge funds and institutions to cover billions of dollars worth of losses, which does on the back end come back to corporations like the NSCC. Now, number 2, calculating SLD based on observed member activity rather than based on historical and forecast settlement activity. So monitoring each individual hedge fund and institution that are over leveraged. That's basically what you can get out of that. Number 3, adopting an intraday SLD calculation and collection when applicable on the first business day of the month. Option settlement periods based on additional exposures that are represented by options activities submitted after the start of the day. Eliminating the 90-day holding period for certain SLDs. So they want to actually make people deposit more money each and every single day. If they can't meet those requirements, instead of having 90 days to meet those requirements, you could potentially be margin called in that same day, which I think is fair. That happens to us, so I think it's fair for hedge funds and institutions to get the same exact treating. Now it says number 5, adopting a discriminatory alternative pro rata collection of members' SLD requirements that would apply in certain circumstances and allow NSCC to allocate its largest liquidity need on a business day among members that are required to pay SLD rather than collect separate SLD from each of those members. So long story short, they want to start monitoring even closer the individual hedge funds and institutions that may not be depositing enough money into their SLD funds, and that would really fall back on the overall fund, right? You can think of it as a liquidity pool in the event that they would default on some of their options obligations, that they're going to have to deposit more money because they are seen as more risky. And then number two, that instead of just getting 90 days to come up with this money, that they will potentially have to come up with this money each and every single day, and that will just automatically by nature force them to want to cover their shares faster instead of put this extra money up and tuck it away per se. So that is basically the gist of what is going on with NSCC-002. Now, like I said, we don't know if it'll get passed on Monday, but if it does, we could see a lot of shorts that do start to cover their positions. Now, getting into the Stocko tracker, guys, next week, this up until Friday, right, June 25th, will be a huge day for options. Out the money options is currently at 152,271 contracts that are held in people's brokerage accounts, and that would represent about 15 million potential shares that would need to be covered. But we do have in the money contracts of 64,860 contracts, so that would be about 6.4 million shares, almost 6.5 million shares that automatically would need to be hedged. Now, keep in mind, it is only Monday, so even options that are in the money a little bit probably have been hedged for at least part and part, right? But not all of them. They're not going to start hedging all these options. If you have a $60 call or a $55 call, they're not going to fully hedge those options out, probably for the most part, but they're not going to fully hedge them out in case. You got to think about it, right? If AMC fell to $40, they would be stuck with all these shares at $55. So they are going to start hedging, but they will really start to hedge once we're at about that $70 price point, and we will talk about that more on the actual option chain. So overall, we have over 200,000 in calls that are in the money and out the money. So you're really going to want to see these out the money contracts start to go in the money. That's where you're going to see a lot of hedging going on, especially Wednesday, Thursday, and Friday, but especially Thursday, and then ultimately Friday will be a big hedge day. Both of those two actually, but especially Friday, as we all know, that is the day these contracts actually do expire. And if none of these weren't hedged for that were in the money, they would have to be hedged for at that point. But keep in mind the out the money contracts, if you guys want to check this website out for yourself, it is Stocko Tracker, and you can track this on a daily basis. Now, taking a look at the actual option chain, guys, this is where it is very, very important. We do see about 11,000 open interest contracts in people's brokerage accounts for the $60 strike. Now, some of these may be hedged for, but I would go as far as to say probably about 90% of these aren't hedged for, just because we did see a down day. And market makers, like I just said, they don't want to buy all these shares at a high strike when potentially AMC could fall. But as we know, it's way more likely AMC does not fall, since they are on a very bullish trajectory, which we will also look at. So they're part not going to start hedging a lot of these actual options until it does get closer to the end of the week, or if they do go deep into the money. Now, nothing too significant, about 2,000 in open interest up until about 65, and then you get 11,637. So that is a bigger day, but especially at the $70 price point, that is about 13,000 contracts that are held in people's brokerage accounts. And then you go to 80 has 7,500 contracts in people's brokerage accounts, and then 100 has 15,000. So it's pretty much every $5 move, like I've been saying on this channel, $5 to $10 move, literally 60 to 65, and then 70, 75, 80, they all have a higher amount of open interest, which is very common when you are seeing big moves in stocks like this. People tend to go with even dates. But with that being said, you're going to want to watch how many FOMO buyers do come in and start to buy these contracts. And these are risky, guys. Keep that in mind if you are trying to buy these. Very, very risky. I wouldn't personally do it, but if you're looking for a home run win or potentially lose all your money you put in on these contracts, then it might be a move for you. Like I said, not a financial investment advice or none of that. I just quite frankly wouldn't do any of this. But you're going to see a lot of FOMO buyers coming in, especially if the price does keep going up. The more open interest you do get on the option chain, the better it does look once we break these certain thresholds. holds. Now, like I've talked about in other videos, I think the reason why we didn't break $60 on Friday was because Citadel and a former Citadel employee, and Matt Kors actually just did an interview with him after I posted the video about 2 days ago now. But essentially, he pretty much admits that Citadel does manipulate the order flows. So I would go as far as to say that, and Citadel gets about 40% of all retail trading order flows. So that is a very, very significant number, and they do have the power to do that. But like I said, you're going to want to watch the option chain here and see how many options do start to go in the money, as well as out the money options that do start to pick up. But I do also want to point out, for any apes that are doubting the whole movement or potentially thinking about selling their positions, we are in a very bullish uptrending pattern. This has not changed. And as far as a technical level, and keep in mind, you have to watch the technicals when it does come to this AMC trade, because it is not based off of fundamentals like you have heard over and over and over again pretty much in every single video. This is a technical trade, so you have to watch the technical analysis and the technical levels, and everything here does indicate we are still in the path to the right direction. Now, yes, we have came down from $77, but we did hit that low of under $40. We have recovered about $20 from that, over $20 from that, and we are at the higher end of this range once we do break out this $60 pattern, because we've been consolidating in between 60 and about 55. Once we do break out of 60, then we're really going to start seeing a lot of legging up and a lot of shorts that are potentially covering their short positions. But we will go over more of the technical analysis in a later video. I will do that on Sunday, give you guys the full breakdown of what to be watching for, the potential upside and the potential downside, like we always do, as well as everything else you guys need to know. So that is going to wrap up this video. Make sure to check out the links down below. Get up to $70 in whatever free stock that you want using the link for public. No deposit necessary. No need to even link a bank account. No need to even deposit a single dollar, guys, and you get to choose your stock. I got $30 worth of Beyond Meat and $50 worth of Tesla, so it is worth rolling the dice and seeing what you do get. Now, make sure to check out the link down below for Webull as well. Get up to $2,300 in free stock when you deposit $100 on the platform, as well as if you guys want to stay up to date with the moves that we are making in the community, I send out my buy and sell alerts in real time every time I make a trade in stocks, options, and crypto. We just hit last week a 500% winning trade, multiple 100% winning trades, and it literally pays for itself. So with that being said, I will see you guys later. Until next time, take care.